Hello, everybody, and welcome to SEC Roundup. I'm Nick Morgan, the co-founder of ICAN, Investor Choice Advocates Network, and the co-host of today's episode. I'm joined by, proud to say, a ICAN advisory board member and special counsel at the law firm of Cooley, Rodrigo Seira. Rodrigo, thank you so much for doing this.
Hello, Nick.
And we were joined by our special guest today, a former commissioner of the Securities and Exchange Commission and founder of Paredes Strategies, Troy Paredes. Troy, thank you so much for joining us.
Thanks for the chance.
So the reason we're getting together, other than to talk, is that you both participated in a recent roundtable hosted by the Securities and Exchange Commission. Troy, you as moderator, and Rodrigo, you as a panelist. This is, or was, the first of what is going to be a series of roundtables hosted by the SEC on the subject of regulation of cryptocurrencies and digital assets. I watched the panel. I thought you both did really well, and it was very insightful. But what I wanted to talk about is the roundtable itself is, I think, a sign or a symptom of a change in perspective at the SEC with regard to digital assets. Rodrigo, you mentioned in your comments on the panel the importance of regulatory humility and rebuilding channels of communication. Can you expand on that a little bit and explain what you see as the most significant shifts in the perspective from the SEC on regulating crypto in 2025 versus prior years?
Sure. And thanks again, Nick. I think it's no exaggeration to say it's been a really dramatic shift over the last admin change. The prior administration had a very strained relationship with the crypto industry, where there was a breakdown of trust and communication that I think ended up hurting market participants, investors, and frustrated a lot of founders, resulting in some of them leaving the US. The prior administration was in an enforcement-only mode. They gave no guidance, basically, and they had no recognition that the securities laws as applied to crypto were unclear. Their position was basically that crypto as an industry was a group of scofflaws. I think this was probably epitomized by Trey Gensler's statements in connection with the Kraken settlement, where he said something akin to, these companies know how to comply, they know how to register, they're just choosing not to do so, even though it's a form on our website, right? And I think that posture really frustrated a lot of people in the industry who were trying in good faith to comply, but didn't know how. And I think it also didn't really comport with the reality where you had judges, for example, in the Southern District of New York, which I mentioned during the panel and got in trouble with Troy, disagreeing over the interpretation of Howey as applied to secondary markets, right? And in the background of this, Congress considering legislation that would more clearly define the role of the SEC here. So I think what you've seen with this admin is a re-engagement with the community and a process to try to build back that trust, which includes the roundtables. It also includes the request for information that the Crypto Task Force has put out. And I think a couple other really remarkable shifts, including we're seeing a regulator that is willingly limiting their own authority. I think that's remarkable in the context of securities, but also just more generally with the different statements that the SEC Task Force has put, where they're basically cleaving off certain types of activity, which they say is not covered under the securities laws. And when I refer to regulatory humility, what I mean is it's this recognition that the law is not clear, right? And if we acknowledge that the law is not clear, maybe we shouldn't go out and sue companies for failing to comply with these laws based on theories that are, in my view, straining the authority of the commission. So we've also seen, for example, the SEC drop a bunch of the cases that were brought under the prior administration.
So you sort of approach this, I think, Rodrigo, as a consumer of SEC services. So let me turn to Troy who obviously was a commissioner and may have a different, or maybe it'll have the same perspective. Let me ask you the same question or similar question, Troy. What, as a former commissioner, what do you see as the differences in the current commission's approach to prior commission's approach, and what are the most important of those differences, you think?
Yeah, so I think one of the characteristic differences, and Rodrigo hit on it, is the willingness to engage in a different sort of way. I mean, if you take, for example, the series of roundtables, I haven't gone back to try to see whether or not the SEC has done a series of roundtables like this on other topics. If they had, it's certainly not in recent memory. Sure, they've done, roundtables, hearings, those sorts of things on a more one-off basis to tackle a particular issue, get the benefit of interested parties and stakeholders' input, but to lay out a series of roundtables in a very thoughtful way. You can see the rationale behind how they sequenced the roundtables they're having, starting with the one that I had the privilege to moderate and Rodrigo the opportunity to participate on, which goes to the threshold question of whether or not something is a security, because that then determines whether or not the SEC has jurisdiction in the first place. I mean, that is the starting point for all of it, is does the agency or does an agency, which agency or agencies have jurisdiction? And then they went a pace from there. So that itself is a very thoughtful approach. And one of the other things that has struck me about the roundtables so far, just focusing on the roundtables, is it's clear if one watches or just reads the reporting on the roundtables, there's not consensus, there's not agreement. And by the way, it's not just folks who think that the SEC should have a lighter touch or constrain its jurisdiction. There are folks who are participating who think that the SEC should be very active in terms of regulating the crypto space. So I think that's also a credit to Commissioner Peirce and to everybody at the commission who's involved in this to say, look, we're not just looking to hear the perspective of folks who are inclined to agree with where we may be generally or philosophically, but rather we want to have the breadth of input. And I think that reflects also a willingness, a genuine willingness and openness on the commission's part to learn, even at this point in the process, as they take on what is a very significant task. This is not an easy thing to do. Again, as evidenced by the roundtables, as evidenced by the input that the commission has received, and as evidenced by the several questions that Commissioner Peirce kind of posed to frame all that was going to follow. It's a very significant task they have before them, extraordinarily consequential. One other thing I would just note, there are many other things one could note, but one other thing that I would note is the commission, I don't know if they said it quite this bluntly, and so I'm kind of interpreting, maybe they have said it quite this bluntly. But the commission, or I should be more precise, Commissioner Peirce and other individuals at the commission, I think are looking to, generally speaking, embrace the promise and opportunity that the underlying technology affords and what that innovation means in the context of securities markets. That doesn't mean that they don't have, again, tough questions to deal with, as evidenced by the roundtable. But I think that's an important starting point, is to recognize that there is a lot of benefit that can flow from the leveraging of the technology. And that then, I think, sets the precondition mindset, if you will, for all that's following. And as part of that, you then have to wrestle with and think through the technological details of the underlying technology, how those do or don't align with the particulars of current regulatory requirements, to figure out a way for that to match, to vindicate, if you will, key regulatory objectives which persist irrespective of technology, but to do it in a way by crafting a regulatory regime where the particulars of the regulatory requirements make sense, align, are workable, given what the technological innovation is. That's set aside any particular policy views or any particular determinations they'll make in terms of exactly how to do that. That sort of alignment, that sort of workability, that sort of pragmatism, I think is very important. And I think you see that underpinning a lot of the commission's approach.
Yeah, I think that's right. And I'm going to give you a chance here, Troy, because you did a great job as moderator, being a moderator and taking sort of a UN neutral approach to what the panel was saying, and not sort of tipping your hand on your own views. But the panel, as you say, provided a broad spectrum of viewpoints, from John Reed Stark saying the courts have spoken. There's really nothing left for the commission to do. Like that, we know what securities laws apply. We know how he applies to this. And then you had others like Rodrigo and Miles Jennings from Andreessen Horowitz, who had other views about the right structure that the SEC should take. I'm wondering if you and when you came on SEC Roundup like 2 years ago, you had a view that there's going to need to be some line drawing here. A particular digital asset might be a security or it might be something else, but it's going to be something. I think is the way you kind of framed it up. So I'm wondering if you have a particular perspective on the right framework for the SEC to tackle this very difficult problem.
Yeah, so everything is something. I continue to hold to that view. That's not such a grand claim. I think that's a pretty obvious a statement, but I think it's an important one because even if something is not a security, a crypto asset is not a security, it doesn't mean that it's not subject to some or many regulatory regimes. I mean, it's not as if the CFTC doesn't have a regulatory regime. It's not as if there isn't consumer protection, even when you get outside of the context of financial services. And that I think is important because yes, so much is determined by and will be a function of whether or not something falls within the scope of the SEC's jurisdiction. But even those things that don't fall within the scope of the SEC's jurisdiction, there still is a regulatory analysis that one needs to go through to ensure they're complying and doing all the things they need to do. And by the way, that's not just federal, that could be state, of course, international, and the like. So it's more complicated than the SEC for sure. As to the SEC, and as I've often put it, kind of the what is it question, one of the things that I think becomes clear, and you see this in terms of how the task force at the SEC teed up the first roundtable, is it's really not an it, it's more a they, right? They referenced the phrase that the task force was using was crypto assets. And I think what's important there is the plural, not the singular. And that goes to the question of classification or categorization or taxonomy. I think those are all generally synonyms, broadly speaking, because the answer may vary based on, likely does vary in terms of whether or not it's security in the scope of the SEC's jurisdiction as to the particular aspects, features, characteristics, whether that's from an economic perspective, whether that's from a governance control perspective and the like. So it's very difficult, I think, to paint with too broad of a brush. And in fact, sometimes I think that can be a point of confusion because there's the tendency for all of us, myself included, to use a particular word or phrase. And I have something in mind, but Nick, you may have something else in mind when I use that particular word or phrase, in which case it's hard for us to have as constructive of a conversation as we otherwise might, because we actually are talking about different things, but think we're talking about the same thing. I think there's a lot of that because the terminology itself hasn't really come to rest with agreed to this term means this thing or that thing or the other thing. And that came out, I think, and comes out through the roundtable. And again, it's a plural assets. It's a they, it's not an it. In terms of overall approach, one of the things that I think is important is not only one, the commission's recognition of all of that nuance and the importance of engaging with that nuance to make these determinations and to draw these lines and these distinctions. But I think what's also important is to kind of take a step back and understand the challenge. It is a challenge of trying to fit current technological innovation within the construct of regulatory requirements or even principles or factors or prongs, if you want to put it in that way, say under Howey or otherwise, where even the terminology and the vernacular can be a bit of a roadblock to figuring that out. So a lot of focus, for example, is around, when it comes to Howey, is around efforts of others. Well, efforts of others, if you look back at the decades of jurisprudence applying Howey, you can kind of sense your way to, when we talk about efforts of others, you kind of have a sense of what efforts are. Well, you're doing this and you're managing that and you're making those decisions, what have you. When you're thinking about it in the context of underlying blockchain technology, it's a very different way of thinking about, well, what constitutes efforts of others? And by the way, which efforts of which others matters for purposes of determining whether or not this particular element of Howey is met, and whether it is or isn't could be determinative as to whether or not something is a security, which in turn is determinative as to whether or not the SEC has jurisdiction in the first place, right? So that sort of regulatory requirement, even principles, factors, considerations, how to think about those and apply those in the context of a very different technological environment. So it goes back to this point that I made reference to a bit ago, which I do think is a challenge of thinking through how to kind of intersect, if you will, interplay technological details with technical regulatory requirements. And for me, taking a step back, or try to take a step back, whether it's on the question of what's a security, or start thinking about some of the more substantive regulation across our markets, and not, as best as I can, not starting with the regulatory details. If you look at the Code of Federal Regulations, or you look at a particular set of guidance or no action letters or exemptive order or what have you, but take a step back and ask myself the question, what's this set of regulatory requirements? What's this element of the regulatory regime? What are its goals and objectives? What's it all about? What is it trying to achieve? And then ask the question, all right, is there a different way, maybe even a better way, to achieve those regulatory objectives in light of the underlying technology? And as a result of that, what might need to be the adaptations of the regulatory details so you can continue to serve the regulatory objective, but do it in a way where the regulatory details change so that they are more adapted to the underlying technology. I think that's a fundamental consideration. Otherwise, my concern is you can get tied up around certain regulatory requirements that the requirements as constructed may not be workable, may not be the right ones given the underlying technology, even if the underlying objectives that the regulators were trying to achieve, or Congress, when that regulatory regime was put into place, continue to hold. Fraud is something that, we should have anti-fraud. We should have anti-manipulation. We should promote capital formation. More liquidity is a good thing. Informed investor decision-making or consumer decision-making is a good thing. Protecting against misappropriation and theft, i.e. custody, is a good thing. Those are the kinds of things that are important, it strikes me, for markets to function effectively and to be inclusive of widespread participation. Now, we have regulatory requirements that map to all of that, but given the technology, there is probably a need to change the regulatory details, again, to be workable and aligned with the technological details in a manner that continues to serve what those interests are, what those objectives are, which are important to regulators, but I do think also important to having markets that have integrity, that people can credibly kind of rely on and are willing to participate in, which I think creates the preconditions for a really, thriving environment, industry, space going forward.
Let me, if I can, take what I think is an example to see if I understood what you were just talking about, Troy. So, obviously, you've described a more principles-based approach, and the principles precede the regulatory regime that comes out of those principles. So let me just take an example that might fit here. I'm thinking about the custody rule. The custody rule, there are some specific regulatory requirements. They sprang from a desire to protect customers of broker-dealers and investment advisors. But now you have this new technology in the form of crypto assets. And so, I think what you're saying, correct me if I'm wrong, is rather than starting with the minutia of the current custody rule as applied to old, stocks and bonds, let's go back to the principles that gave rise to the custody rule in light of this new technology and make sure that the regulations map to what the real objectives are, the beginning principles.
Yeah, custody is a good example, I think, because I think by referring to it as custody, it can start to sound, as you say, kind of regulatory minutia and kind of super duper regulatory technical. And there are elements of it without question that are much more technical. And by that, I mean kind of technical from a regulatory perspective. But when you take a step back, Nick, just as you said, and you ask, okay, well, why is there so much and why has there been over the years so much focus on this thing that we call custody? And the answer is exactly as you said, pretty straightforward and pretty, I think, hard to argue with, which is you want to make sure that if people own something, it's there. I mean, that at its highest level of generality, right? Whether that's a principle or whether that's an objective. And I know that's a little casually stated, but kind of, I think that captures the essence of why there's so much focus on custody. And it's hard to argue with wanting to make sure that the assets somebody owns are there or where they're supposed to be.
Right.
You can put that in terms of anti-misappropriation or anti-theft and other things, customer protection, what have you. So if you start with that and then say, all right, well, we have a whole body of requirements and understandings and practices that have developed about how to meet that objective, possession and control, et cetera, in the context of traditional securities. When you take a step back and say, well, instead of starting with all of the ways in which, as you said, the minutia and the details and the understandings and the practices have developed with respect to traditional securities, let's go back to the purpose. The purpose is to make sure the assets are there. And it's a good example because it's one of those areas that folks point to say, look, there are ways in which the underlying technology may itself be leveraged to help meet that objective.
Right.
Now, I'm not making the point from a technology perspective. I'm not a technologist, and I'm not, coming down strongly on one side or the other. But it's the kind of perspective to say, hey, wait a minute, we may be able to, by virtue of what the underlying technology allows for technologically, may be able to meet or advance the objective that all of these regulatory requirements developed with a different type of securities and different technology in existence developed with respect to. Let's approach it from that perspective, which is not to say more regulation, less regulation, no regulation. It is to say workable regulation that aligns with the underlying technology to advance the overall objective. And if you start there and reason back as compared to starting with the details that have accreted over the years, I think there's a better opportunity in terms of making the kind of progress a lot of folks are looking to make, where you have workable regulation, clearer, more clarity, and yet you aren't compromising when it comes to key safeguards that regulators are concerned about, and that ultimately can promote market integrity, which can be good for markets and participation in those markets in a way that folks have more comfort with.
Rodrigo?
I totally agree. I think maybe just to throw out one other example that comes to mind is, disclosure, right? One of the core kind of fundamental premises and purposes of securities laws is solving information asymmetries. And I think that forcing all of crypto into the current securities disclosure regime would not solve that policy goal. It might even confuse a lot of people, right? Because I think the current securities disclosure requirements are premised on assumptions that don't always hold true for crypto assets and decentralized networks. They're all premised on the assumption that the value of a security stems from the financial operations of an issuer and its management, right? And that linkage is not there for something like Ethereum or Bitcoin or like pick your other digital asset, right? So and I think there's the other point to make is a lot of the information about these crypto assets is publicly available, right? Not to say that it's intelligible to everybody, because it's not, but there's a lot of information that is not kept by insiders. So I think taking into account the fundamental policy goals of securities laws and taking into account the differences in the way that the information is distributed based on this technology could lead us to rethinking the way that we're applying the rules and coming up with a framework that achieves those goals in a better way that ends up protecting consumers and giving entrepreneurs a pathway forward.
Yeah, and can I just add a piece, because I think it's a good example. If the analysis were to start with you need to comply with every Reg SK disclosure item, it's going to Rodrigo's point, it'd be really difficult given the nature of these projects and how that differs from a traditional, say, corporation, which is what SK was developed to get, to require disclosures about. So if you start with, compliance with Reg SK, there's a mismatch in terms of the nature of the technology and the nature of the projects, et cetera, to Rodrigo's point. If instead you take at least a bit of a step back and say, well, what SK is about trying to make sure that, investors in this instance have the information, the material information they need to make an informed decision. So if that's the starting point, the policy, the principle, the objective, the goal, however one wants to, label it, then you say, all right, well, that's the goal and objective. So what are the relevant disclosures to meet that goal and objective? They're going to be very different than what you see if you look at regulation SK as it exists today. It seems to me that that isn't compromising regulatory objectives. It isn't somehow watering down the regulatory requirements. It's rather figuring out and adapting the regulatory requirements, the particularities, to fit with, given the nature of the underlying technology and different projects, et cetera, but still advancing what the overall goal is. So the difference between the goal versus how we advance the goal, I do think, while in some level is simplistic, perhaps, I do think is an important distinction in terms of how to frame the efforts to go about tackling this.
Well, maybe we'll leave it there. Thank you both for your insights. The title of the panel you were on, incidentally, was Sprint Toward Crypto Clarity. That suggests the SEC intends to move with some speed, if they're sprinting, toward clarity, which is a good thing. So maybe we will see some further no action letters, some 21A reports, maybe some rulemaking in this area that will indeed provide clarity. In the meantime, I guess we'll all watch the subsequent panels and hope for the best from the SEC. Thank you both for coming on. For everyone else, if you want more information about ICAN, we are at icanlaw.org, and we'll see you on the next SEC Roundup. Thanks, guys.
Thank you.